Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices extending higher. The trend continues to push gold prices higher, highest since middle of September. So we've kind of seen a little bit of a breakout here after things looked pretty bleak back in December. We've seen the extension of buying come back in post the DSFOMC. We've seen the specs who were getting out get back in, and we've seen the dollar kind of help aid pushing prices higher. But from a technical perspective, we're looking at it targeting 1350, a level which was off, I think, everybody's radar not too long ago. So right now, gold prices continue to extend higher. Yeah, we did see some up and down pricing late this week, but coming into the weekend, it looks like we're coming in on a very bullish tone. Now, the dollar, as I previously mentioned, aiding in the bid to gold. Now, the dollar saw a brief bid following the December FOMC, and since has really continued that trend from 2017, which is lower. And whether it be a Washington trade or whether it be a Fed trade or whether it just be a weak dollar trade right now, that is helping push gold prices higher and will continue to do so. It doesn't look like the dollar is going to reverse anytime soon. And lastly, I touched on positioning. Spec longs were quick to get out on the move from about 1308 down to 1240. There was a big exodus of longs, and they started to get back in after we reascended and got back above 1275. We did start to see some big buyers. So now we're seeing longs get back in the market here. Now, certainly they're not getting long at the pace they were in 2017, but they are a driver to the market. And what suggests to me that the fact that they're not as long as they were in 2017 and prices are getting to that same level means we have a lot more upside here if those specs decide to get a little more bullish. I think some of the momentum that we've seen in gold has been stolen by the cryptocurrencies and has been stolen by equities. However, as a defensive measure, I do still see that there is a need to be long gold here, and I do see that with the weaker dollar and a lot of uncertainty globally, gold is still a good place to hang your hat, especially if you're long a boatload of stocks, because it's a good hedge against the what-if scenario that we haven't seen, and the market certainly isn't anywhere near price for. So gold heading into the weekend, trending higher, targeting 1350. I don't know if we'll get there next week, but that's where we're on pace for. This is Todd Colvin coming to you from the floor of the CME Group.